Good afternoon. Today I'm going to tell you about this cash break-even point, cost break-even point, and composite break-even point. Okay, first cash break-even point. It is a point where cash receipts on account of sales are equal to a cash expenses incurred. Okay, you should not take into account non-cash items. So cash break-even point in units is equal to fixed cost minus depreciation plus other non-cash fixed expenses divided by cash contribution per unit. This is the formula to calculate this cash break-even point. Now, composite break-even point. It is composite means taking into account the entire organization, that is whatever it may be the organization that is there, and whatever it may be the component products that they are taking, they'll take into account all these things. So composite break even point in units is equal to total fixed cost into total sales divided by total contribution, that is equal to total fixed cost by PV ratio. This is nothing but composite. Okay, when you go for composite, some products they may give losses, some products they may give profit, but whatever it may be, you have to take into account the total things, and you have to calculate this composite break-in point in units. Okay, then cost break-even point. Okay, cost break-even point, what is this, sir? Cost break-even point is nothing but, okay, different options. When you are going for different options, okay, with varying costs, cost break even point helps in identifying the level of output at which both the options result in equal cost. At another point, a particular option may be more cost effective than the other. The choice of the option may be made depending upon the level of activity. Cost break-even point can be calculated with the help of algebraical equations. Okay, so this is about cost break-even point. Then margin of safety. So what is this margin of safety? Margin of safety sales is the sales over and above the break-even sales. That is, we have to take into account the total sales, and we have to take into account the break even sales, and the difference between the total sales and break even sales is nothing but margin of safety. Margin of safety sales is equal to total sales minus BEP sales, or profit by PV ratio. Margin of safety ratio is equal to margin of safety sales by total sales. This is very, very important from an organization point of view. So this is about the marginal cost, okay, and with the various formulas for that marginal cost. Now, after that, we have to go for decision making. So what is decision making? This is completely the aspect of my management accounting, that is what to do and what decisions we have to take. Decision making is very, very important. Okay, decision making is about choosing among alternative courses of action based on quantitative as well as qualitative factors. So this is about decision making, and this decision making, it will be taken by the management people, the management accountants, and the management people only. They have to take decisions, and in this, okay, various types of decisions we will come across. Okay, we need to understand a few more concepts of cost. Differential cost. Okay, what is differential cost? When two alternatives are being evaluated, the difference in costs incurred in respect of the two alternatives is called the differential cost. Okay, and sunk cost. Then next comes the sunk cost. So what is this? In simple terms, sunk cost or costs have already been incurred and no amount can be recovered on that front irrespective of the decision made. This is about sunk cost. Now, shutdown costs. Shutdown costs are costs that will continue to be incurred even if there is a temporary closure or shutdown of the product facilities. This is about the shutdown cost. And after that, avoidable costs. Some costs can be avoided, and those costs will call that thing as avoidable costs. Fixed costs that can be saved by suspending activities are called avoidable costs or escapable costs. Okay, next, notional cost. Notional cost is hypothetical cost. Hypothetical. It is not an actual expense incurred. Interest on capital, rent of owned premises are examples of notional cost. Next, opportunity cost. This is very, very important. Opportunity cost. So, suppose if you take into account an example, suppose a person is undertaking the tuitions and at the same time he has to work in a college, then that person what he will do is, what is the amount that I am getting from tuitions and what is the salary that I am getting from the college. He will compare both the things. Then what he will do is, if the college salary is less than the tuition's amount, then what he will do is he will sacrifice. Okay, he will sacrifice this college and he will continue to go for the tuitions. That is nothing but opportunity cost. Opportunity cost is the value of a benefit sacrificed in favor of an alternative course of action. This is one of the important cost that we will come across. Next, make or buy decisions. Make or buy decisions. This is one important aspect that we have to take into account in this decision making process. Make or buy. Suppose when you are doing, then when you are working in an organization, okay, a part of the machinery, it was broken, then the management people, they will go for whether to make the part or whether to buy the part. Okay, suppose they will ask whether this the part can be made in our organization, made in our company, or whether we have to go for buying of that component. So the people, according to the people's advice, suppose one person says, the technical manager or the production engineer, he will say that, sir, we can manufacture and we can make this, so thereby the cost, it will be very less rather than going for that component. Then the management, what they will do is, they will ask that person to make that component as it is and see that it is useful. So make or buy decisions. When you are going for make or buy decisions, okay, one thing you have to observe is contribution is the main key factor, that will take into account the this thing, make or buy decisions. So to purchase the product from outside or whether to make that in the company, that is nothing but make or buy decisions. Here the major thing, it will go for the contribution. Then after that, they will take into account the return on investment. What is the return on investment? Whether we are going to get any, okay, suppose if we want to invest that, whether we are going to get any return or not, they will take into account. That is the key factor or limiting factor. In simple scenario, where a business has unlimited resources, whether to drop or continue with an existing product will bring down to whether the product is generating positive contribution in excess of fixed costs, I mean incurred solely when the product is being made. Okay, this is nothing but add or drop products, whether we can add or whether we have to drop. So in this limiting factor also, the limiting factor or the key factor is nothing but the contribution. Okay, so when you are going for make or buy decisions, okay, whether to add or drop decisions, okay, the main key factor is nothing but the contribution. What is the contribution that was there? So when you want to add, what is the contribution that you are going to get, and when you want to drop, what is the contribution. Whether the contribution is excess of this fixed expenses or not, we have to take into account that thing. So that is most important when we go for so, add or drop. Next thing is, okay, sell or further process. Sell, whether we have to sell or whether we have to go for further processing. So this thing also is one of the important concept of the decision making. Whether to sell, the decision to sell a product at a given to a stage or process it further depends on the concept of incremental cost. This incremental costs are the additional costs that need to be incurred to process the product further. If further processing results in extra benefits, that is greater revenue, an extra benefit, that is greater revenue, which are more than the additional processing costs, then we can process the product further. So this is the thing. Okay, examples. In petroleum refining industry, the initial process produces crude oil and natural gas. Crude oil can be further refined into petrol. The decision to be made is to whether to sell the crude oil as it is or should be refined into petrol and sold. So this is one of the important concepts of decision making. Next comes the operate or shut down. Okay, generally businesses they will come across some losses. Okay, so what they will do is whether we can be in a whether we can be in a position to operate or whether we have to shut down. Okay, so this operation and shutdown of the organization or of the product, it is nothing but the important decision taken by the managers. So when we go for this, sometimes when the economy or the industry is in a recession, demand for products of a company may fall significantly. So okay, significantly the demand is so low that the company has to operate below normal capacity. This results in losses as the company is not able to recover its costs in full. In such circumstances, the company may consider a temporating shutdown of operations. Okay. The decision to shut down must be taken carefully as there are many expenses that will continue to be incurred even if the operations are temporarily shut down. Shutdown point is equal to avoidable cost minus restart cost divided by contribution per unit. I told you already that contribution wherever you go, when you go for make or buy decisions, compulsory contribution is one of the important factor. Next, special order pricing. What is this special order pricing? So when you order the production of some products, okay, you have to take some extra amount, that is nothing but special order pricing. Okay, suppose take for example a company, it is producing 1000 units. Suppose a customer, if he wants more, okay, 500 units above the production, then for 500 the company people they have to charge extra amount. Okay, that is nothing but special order pricing. So with this I'm stopping here, and next I'm going to continue regarding this budgets and budgetary control. Okay, thank you. And please, if you like this, please subscribe to my channel. Thank you.